Okay, so basically in our class today, we're basically going to be looking for a simple trading system. And just like I was explaining the past couple of minutes, we want to trade in the direction we want to trade in the direction of the higher time frame structure. And we deduce that this market, right, has moved from a bearish market to a bullish market. Okay, so we said the market moved from being bearish, which is within this area here. This is the bearish market. And then you can now see the markets. This is where. So the market went from being, what is this? So the market went from being bearish within this area here, okay, to being bullish, right? So what basically I'm saying is, in a bearish market, we are looking for opportunities to sell, while in a bullish market, we're looking for opportunities to buy. Now, we use the higher time frame, like a daily chart or a 4-hour chart or a weekly chart, to identify the structure. That means whether it's bullish or bearish. However, when we're looking for entry, we go down to a lower time frame. And like I was trying to explain, just because the market is bullish, so in this daily chart here, you can see that this period here is just bullish. It's not bad. There's no bearishness in it at all. However, if you drop down to a lower time frame, let's say a 15-minute chart or a 30-minute chart, you would see that the market will go from bullish to bearish to bullish to bearish, because that's exactly how the market works. So what we are looking for is, if we identify the trend on the higher time frame, what we want to see is we go down to the lower time frame and trade the market in that direction. So I just highlighted this green area so that when we drop down to the lower time frame, we'll see that we're still within that area here. So if we drop down to the 1-hour chart here, for instance, let me close this. If we drop down to the 1-hour chart here, for instance, you'd see that the market, which was smoothly bullish on the daily time frame, this green area that we just highlighted, which was very bullish on the daily time frame, actually alternates between being bullish. You can see this is bullish to now being bearish to being bullish again, right? And then if you go down to an even lower time frame, you will see more back and forth in price. So here's what we do. Once we've identified the direction of the markets that we want to trade. So in this market now, for instance, let me give you a tips for those of you who are traders. On Euro CHF, I am bullish. On Euro GBP, I'm bullish. On XAU USD, I am bullish. That means I'm looking for bullish opportunities on these pairs. Now, here's something that I'll show you some trades that I personally took and why I took them. Okay, so now let's look at this area here from where the market shifted bullish. Now I'll go back up to the daily time frame so that we can just highlight where we had the break of structure. Okay, so remember, let me just draw this out. This was our high, right? So this is our high to a lower low, right? To a lower high, to a lower low, to a lower high, to a lower low. That means the high, the most recent high, the high that needs to be taken out for this market to turn bullish is this high, because this is the last lower high. So at the point where markets broke above that high, that is the point where we now begin to look at this market as being bullish. Now, just because the market is bullish doesn't always mean that the market cannot go back to being bearish, but chances are, since we have this break of structure here, it means that from this period onward, we would be looking for buying opportunities. So this now shifters basically it now filters the area. So during this area here, we would actually not be looking. So let me draw this in. So during this area here, would actually not be looking for buying opportunity. We will be looking for selling opportunities. However, when the market breaks out, that means during this area here, we would actually begin to look for buying opportunities. So this is the valid area to look for buying opportunity. And so what we'll do now is, if we drop down to if we're from, let's say, from current price now, right? I'm going to show you from current price here now, I'm okay looking for buying opportunity. But just to show you samples of trades that we would have been able to take, we will look at this entire area here. Okay, so mind you, I have actually not I didn't, I've actually, I just decided I was going to use this particular pair now because it's one trade that I've been looking at for quite some time. Okay, so let's actually first of all drop down to the 1 hour chart, right? And look at this same area. Now, by the way, I hope are you guys following me? Especially for those of you who have some experience trading, I hope it's making some sense, okay? Just type in if you are following me, so I know. Okay, so now look at this area here, which we highlighted. You can see that clearly the market is making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Now, you would still see that price would make lower lows and lower highs within this area, but this does not mean that the market is now bearish. So for instance, price made a higher high here, but then broke structure lower and proceeded to make a lower low. Now, let me ask this question. For those of you, for everybody here, what do you think I would do here? Would I be looking for selling opportunity because price has broken down on this, made a lower low? Would I be looking for selling opportunity? So remember, the recording of this class will be added to the Anzu course, and I already told you how you can get access to that. Okay. So now, no, exactly. So William says no. Akintoye says no. Bayo says no. So I would actually not be looking for any sort of selling opportunity. Why? Because the overall context of this market for me is bullish. So any bearish sign, I will totally ignore. As a matter of fact, what I will do when I see a bearish sign or a bearish break is to anticipate the bullish move. And then when we get that move, I'll look to trade it. So basically, when we had this breakdown, I would do nothing. But then when price began to range, right? And this is where we now had. So remember, so let me zoom in a little so we can see this area better. So I'm going to zoom in here, 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 so that we can just look at this specific area here. And I'm going to draw the break of structures in price within this area. Okay, so I think everybody should be able to see this now. Now, this is so let me get this, my highlighter. Okay, so this is the low to high, the higher low to higher high, to higher low to higher high, and higher low to higher high, and higher low to higher high. And then at this point, we broke down, right? So we had a break of structure, and we made what you call a lower low. Okay, so this is where, because remember, like I said, just because the market is bullish doesn't mean it will be bullish across all time frame. What it means is it will move from bullish to bearish and bearish to bullish and back and forth. But what you want to do is you don't want to get carried away by direction. You want to have an overall idea or an overall bias as regards to your trade and opportunities you are looking for. Because one of the things that make people lose a lot of money is just now they are looking for selling opportunities. Just now they're looking for buying opportunities. They are buying, they're selling, they're buying, and they are all over the place. And they're wondering why they are not making money in the market. What you want to do is identify the overall direction and then look to trade in that direction. Because remember, think about it. If you get involved in look at if you get involved at trying to buy low because you understand the market is bullish, you see how you would have found it, you'd have found more joy doing so because the market direction is flowing upward. And this is the reason why I like to stay away from bearish markets. If the market is bearish, it will just be taking out buyers and sellers. And so I like to wait for the markets to be clear. And then once we're clear as regards direction, I look to trade basically in direction to price. If the market is bearish, clearly I look to trade in direction of price. Now, so at this point here, I will do nothing because I'll be waiting to see what this is so as a matter of fact, this low here came from that high, okay? So actually came from this, okay, let's say it came from this high, okay? So the moment price breaks back above this high, then we have now moved back into a bullish market. And then I can now begin to look for my buying opportunities again. So instead of, what's that? So instead of, so here, instead of looking to trade every single direction in the market, I just wait for the market to show me the direction I'm interested in and then begin to trade. So now you can see where we have, so let me just label this break of structure. Let's just label this BOS. So that's where we have a break of structure back in the direction that we are interested in looking at it from. Let's make this white. Okay. Now, what is the trade idea that I'm teaching today? Well, the trade idea is looking to trade off imbalances and other blocks. Okay. So now remember, we've done the first part. The first and the most important part is we have identified the direction, the overall direction in price, which we've determined is bullish. And for our trade, we determined that when we had this break of structure, this break here is the daily break of structure that confirmed bullishness. Now, just because this break confirmed bullishness doesn't mean that price must begin to run up. Sometimes the market breaks up and then pulls back down deeper into the daily, the daily retracements, right? So let me see if I can, let me show you what I mean. If I go up to the daily time frame here, so let's go back up to the daily chart here, and we go back to where price was. So here's what I mean. Now, this is where price broke above. Now, if price had pulled back down, it doesn't mean that the market is bearish. It just means that price is making this kind of move, right? So, but in this case, price did not pull back down. It didn't make a deep retracement. It just break, retest, and push away. Okay, so you'll find those happen. But remember, we're not trading the daily time frame. We're trading the smaller time frame. So if in the daily time frame price began to push back down, I would not look for selling opportunity now because I understand that this market is most likely wanting to head upward. Instead, I will wait for the lower time frame to shift back bullish and then look to trade that move higher. Okay, I hope this makes sense. Okay, so now let's go back to our so for this particular trade for this particular class, we'll be looking for trade opportunities on the 15-minute chart and on the 1-hour chart. Okay, so 15-minute time frame and 1-hour time frame. Okay, so let's zoom back. Let's go back to where we were here. So the first possible trade that was available to us started from, so let me just take out this so we can just follow price all the way up. So this is the first, no, actually, we're going to consider this one. Let's just take this out, all of them, so I can. Okay. Okay. Now, this is where we had the first break here. And so we ask ourselves, where did this move come from? Now, you notice that the move, this break above this high here, this break, so I hope you guys can see my screen. Let me zoom in a little bit. This break here, right, came from this low here, right? So this is the first move. So for those of you who understand Fibonacci, you know it's A, B, C. So this is our A to B. And so what we are, because we are anticipating that the market is bullish, we ask ourselves, where could price potentially begin to buy back from? So we have the price, it has made it high, it is now retracing. Where could the selling stop, and where could we potentially enter a buy? Now, an understanding of other blocks and imbalance with a little bit of understanding of Fibonacci can go a long way to help. So one thing I'd like to show you or teach you here for this particular class is the use of imbalances and other blocks, right? So we can see here that price is making higher highs and higher lows. So let me use the marker. So price began to make, so this is a higher high, higher low, okay? Higher high and higher low. Okay, so price is making this resultant higher highs and higher lows. So we're looking for those buying move. Now, for this particular first section here, probably let's say we didn't take any trade here because we are anticipating the retest, right? We're anticipating price to confirm, right? However, otherwise, what you can do is, what you want to do is you want to look for imbalances in price. For instance, look at this particular area here. You can see that price made a low to high. So this is a low to high, to higher low to higher high, right? So this in itself is a complete structure. So what we're looking for is we want to see price retrace into leftover imbalance and then use those imbalance as a reason to use the rejection of those areas as a reason to buy and then take price upward. So in this particular case here, where is the imbalance? I'm going to just zoom in here. right? So basically, an imbalance is a candle where the market left, where the price left without coming back to retest the area. So for instance, so in this particular case here, so imagine, so let me take this to the side a little bit. So look at this area here. So I'm just going to, this candle, right? Let me make it red. Now, you can see that the price pushed away from here. So price made a low, made a higher low, higher high, made a higher low, and then made a new higher high. So we asked ourselves, where could price potentially begin to buy back from? Okay. Now, what you now begin to look is where are the imbalances? Now, remember at the point this candle formed, there was an imbalance in this candle. That means there's a gap, right? So I don't know what's the easiest way to explain this? Now, this is the way candle forms. So this is a candle. Now let's say this is a bullish candle. It has wicks up like this, wicks down like this. Now then another candle form like this, also bullish. It has a wick like this. Okay, you know what? Let's say this up one doesn't have, this is just have a small wick like this. And then the next one forms something like this, right? And then the next candle forms something like this. Now, notice how there is an imbalance. Now, if the previous candle here, let's say the previous candle here was bearish, right? So let's say the previous candle was bearish. Okay, change the color. If the previous candle here was bearish, like so. Now, notice how this candle, so you to spot an imbalance, you need 3 candles, right? Notice how this third candle connects with the first candle. So this is candle 3, this is candle 2, and this is candle 1, right? So at least the low of this candle or the high of this candle, whichever, connects with this third candle. There's no space in between. However, look at this candle now, this one. So if this is candle 1, and this is candle 2, and this is candle 3, and this is candle 4, right? Notice that there's an imbalance between candle 4 and candle 2 because there's no connection. There's no connection between this candle and this candle. So there's a gap. This gap here is what we call an imbalance. So usually, in many cases, price usually tends to come back, right? Price usually tends to, maybe price continues to go, usually tends to come back and tap into this imbalance, sometimes feel the imbalance before continuing going the direction it really wants to go. So we're trying to use that understanding or that idea behind price to look for trading opportunities, okay? And then obviously once we've determined the overall direction of price, then we can do that. So don't just trade imbalances everywhere we see it. For instance, there's a bearish imbalance here. Doesn't mean that when price come back here, we look to sell, right? But because we're looking for bullish opportunities, we are interested in trading those bullish, basically bullish imbalances or order blocks. Now, and on order blocks is just basically the last down candle. So for instance, just think of it like some people call it the FU candle, right? It's the last down candle before an up move, or the last up candle before a down move. So in this case, if there's an imbalance from one of the last down candles before an up move, then it makes it even more interesting. So you ask yourself, where was the last down candle? This was the last down candle. There was an imbalance there. Price came back and then began to push away. So how do we trade this? So we understand what to look for. Now the question is, how do we trade this? Do we just trade it once? Do we just set a pending order or stuff like that? Now there are multiple ways you can do this. Now one way is to just set a pending order. But that's not my ideal. My ideal will be to wait for confirmation. Okay. So what kind of confirmation do you want to look for? Well, look for an absorption candle, right? Look for an absorption candle. Now, what do I mean by absorption candle? Now, an absorption candle is a candle where, so let me draw again. So let me use white. Let me use whiteboard. Okay, so an absorption candle basically is a candle Okay, no need. Actually, let me just draw here. So let's say we have the market is bearish, so basically bearish, whatever the case. Okay, we don't need multiple candles. So let's say this is a candle like this, right? A bearish candle, it's red. Now the next candle is, it doesn't matter, it can be bullish, it can be bearish, it doesn't really matter, right? But if the next candle, the next candle will open here, right? And then let's say it goes down like this, and then ends up closing above the low price of this. This is an absorption candle. Now, some people say it's a pin bar. It's not necessarily a pin bar because it doesn't necessarily have to be like this. This is an absorption candle. Let me give you another example, right? Something like this too. So we have a bearish candle. Let's say we have a bearish candle like this. And then the next candle is also a bearish candle. Like this. Now, this one too also appears to be a pin bar, right? But the idea is the price went below this low, but ended up closing back above it. So it means that there were some orders that the market went, grabbed those orders, and ended up closing back above this low, right? So if you find such a candle from one of these, let's say an area where there's an imbalance and another block, that is your confirmation, the confirmation you need to get into the trade. Once you've already confirmed direction, then you're good to go with the trade. Now remember, you're not going to win all your trades. Nobody wins all their trade, and that's not the goal. The goal is not to win all your trade. The goal is to be profitable. So in this particular instance here, you can see this is our area of interest. We have our imbalance, order block price came back, tap into that area. And what do we have? Let me zoom in so you can see, right? You have a situation where price, you can see this candle here is an absorption candle. I hope everybody's following. I hope you guys are all following. This candle here went below this low, absorbed whatever orders were resting below this low, and then pushed back up and closed above it. There is an absorption candle, okay? Now, once we spot this, then we are good to take a trade. How do we trade that? Well, we place a buy at the close of this candle. So remember, we've seen the absorption candle. At the close of that candle, we place a buy. We put our stop loss few pips below the low of that absorption candle, right? Few pips below the low. So in this case, because this low is very close to this low, we might just take this low, right? And then we put our take profit at 1:3, okay? So we'll go after 1:3. So you understand the rule now. I hope everybody, I hope you guys are all following. First of all, the first thing we did is understand the overall structure in the market. Once we've determined the overall structure in the market, the next thing we want to do is say, okay, well, when we are determining the overall structure on a higher time frame. Once we determine that structure on a higher time frame, the next thing we want to do is go down to a lower time frame, our time frame of entry. In this particular example here, I'm using 1 hour, but it can be anything from 5 minutes, 1 minute, 10 minutes, whatever the case is your time frame of entry, and you look for this same criteria, right? Now, so in this particular case now, once we've decided our time frame of entry, which is a 1 hour in this case, what we want to then do is identify if there are areas of interest. And how do we spot those areas of interest? We spot them by, first of all, determining the order block and then seeing if there's an imbalance between the order block and the last down candle before the up move or the last up candle before the down move. And then if there's an imbalance and if price trades back into that imbalance and gives us a rejection in the form of an absorption candle, then we are good to take a trade once the criteria is met. So in this particular instance here, price tapped into it, gives us our trade. We put our stop loss few pips below the low. In this case, because we are buying, if it were selling, to be few pips above the high. So few pips below the low of our confirmation, and then we go after 1:3. So in this particular case, you can see after a number of minutes or hours, price goes on to hit our target. So our first trade, right? So our first trade, so let's journal, let me just type this right here. So trade trade 1 was a win, right? And we made 3 right? So we made 3 on this particular trade because price went from price entry, we found our entry and price moved away from there. Now, what do? We do the same thing over and over again. Now, what is the same thing? We continue to follow price as price moves, right? So now I'm going to just push this to the side. Now we ask ourselves, where is the structure in this price? So you can see in this particular case here that this is the low here. So this is the low here. Okay, so William say, please help to circle the imbalance. Okay, in our second example, we'll see that. So this is the low here, okay? And then this is the high, right? So this is our low to our high. And then we ask ourselves, where are the moves? Where is this move coming from, okay? Where is this move coming from? That is our low to our high. Let's move our trades to this side. And we zoom in a little bit and we say, well, where are the imbalances in this market? Well, there are quite a number of imbalances here. Not a lot, sure, but there are some imbalances here. So for instance, I don't know if you guys can see this. Let me zoom in even further. So we're looking at the bearish candles and then looking for imbalances around them. Okay, so for instance, here, this was a down move, right? There was a down move, and you ask yourself, is there an imbalance? Yes, there's an imbalance. If I draw this out like so, let me draw this out like so. This was the low of this candle. Let me make this white, right? And this was the high of this candle here. So you can see that there's a gap there. That gap, this between these two white lines is an imbalance, and then this red rectangle here is the other block. So there's an other block here with an imbalance. So remember, at this point, we are waiting for entry. We want to see price, waiting for confirmation to enter, but we want price to come to us. We don't want to chase price. However, in many cases, there might be multiple imbalances and multiple other blocks. So we just highlight them and wait for price to get to us, okay? So there's also another imbalance here. You can see this. You can see there's an imbalance here. And so at this particular point, this is the imbalance. So this price between this candle and this candle, there was no connection. Price came back, filled that imbalance a little bit, but it still left some space there. So we can also have that on our books. But also notice that price now went away from there, that bearish candle here, right? This is the bearish candle, like so. This is the high, and that is the low. Okay. I hope you guys can see what I'm saying. So this is the high. This is another. So basically, in this one move here, there's an other block here with imbalances, and other block here with imbalances, and other block here with imbalance. So we just identify all of them and wait to see which one price wants to respect. Because sometimes you will have a situation where price, comes back, fails, comes back, fails, and then maybe begins to move from here. So you might take a loss here, and then maybe you get a trade here. Sometimes it might just fail all through. And the reason why it makes sense for us to watch for confirmation instead of just placing a buy stop or a sell stop is in case it fails, it doesn't give us any confirmation, then we don't take any trade. Even though we're wrong, we will not have to lose any money whatsoever. Okay, I hope you guys understand what I'm saying. Now, notice that in this particular case, price did not come back to this last order block. Neither did it come back to this one in the middle here. It just only came back down here. And then let's see what it does. Because if I move price away, now remember, as price comes in here, we begin to look for confirmation to trade. Now, what do we say our confirmation is? Our confirmation is going to be an absorption candle. Now, look at this candle here. Quickly, everybody. Would you say this candle here is an absorption candle? This green candle here, let me circle it. Would you say this candle is an... Now, remember, this is where your own discretion comes in. You are going to have to now define what is what's criteria. You're going to have to now, somebody else might say, well, this does not tap into the other block. So maybe it does not enter into the other block. Some might say it enters, whatever the case, you make up your mind. But now, would you call this candle an absorption candle? I hope you guys can see what I'm doing. Quickly. So William says no. I need more response so that I know that it's not only Williams that is following me on this class. Would you call this candle an absorption candle? Okay, so I'm saying some no's. No. So most people are saying no. But the question I'll ask is, why would you not call it an absorption candle? How did we define an absorption candle? It's a candle where price, comes, so this is the low, price comes below the low of this candle, but ended up closing above the low. So price came below the low, but ended up closing above the low. Can't you see? So in this particular case, this is the low of this candle. You can see that this one came down lower than this, and then price ended up closing back above it. So I would say yes, that is an absorption candle. I hope you you grasp the point now. So that actually qualifies as an absorption candle. Now, you might also say, well, it doesn't tap into the zone, and which is fine, right? So the reason I'm pointing this out is because if somebody decides to take this trade, the person is not wrong, right? If you decide to wait for another setup, you're also not wrong. There's no right or wrong. You have to, and this is the reason why you don't just take it. So even if we're done with this, you don't just take this and go and trade it on the live account. You want to test it. You want to do several back tests for yourself and see that you see enough examples, enough sample size of this to be confident enough to trade it. So now let's say in this particular case, we take a trade from here, right? If we assume this is an absorption candle, right? And we take a trade, our trade will be at the close of this candle. Our stop loss would be few pips below the low, right? So now let's say, now ideally, no, this is a 1 hour time frame. So let's say few pips below the low. Let's say we do something like this, and we go for 1:3. We go for something like 1:3. Now, the reason I'm using this example is so that we can have a loss. I don't want a situation where I'm just showing you only wins, wins, wins. So now you might not take this trade. Okay, but even if you do, it doesn't mean you're wrong because you took a loss. Do you understand? So in this particular instance, let's say the trade becomes a loss and we lose that specific trade. That's also fine. So we document our trade. So remember, we are risking 1% on every trade, trying to go after 3%, 3 RR gain. So trade 2, right, would be a loss, and we lose -1 RR. So we are now at +2 RR. So 2 trades taken, 1 win, 1 loss, 2 RR gain. Okay. Now we move. We ask ourselves. Now remember. Now note that I wanted a situation where if this, let me move this to this side so we can see. Now, if this particular trade here, right? If this particular trade here was an absorption candle, even though we just took a loss here, I'd still take a trade here. So you cannot have a rules for yourself where you like, if you take 2 losses or 3 losses in a row within the same area, you stop, you stop trading that area and wait for the market to reset and give you a setup. But there was no trade here, right? So so in this particular area, there was no trade, right? But notice what happened. There's also another trade here, right? There's also another trade setup here. This is still within the same area. This is still within the same area. Now, you can see that this candle here, this red candle here, would you say this is an absorption candle? Yes or no? Would you say that is an absorption candle? Yes or no? Okay. As your responses, would you call that an absorption candle? Yes or no? Quickly, quickly, quickly. Okay, so Chika says yes. Having some yeses, some nos. Who thinks it is not an absorption candle? Okay, so yes, this is actually an absorption candle because remember how we define an absorption candle? It's a candle where if it's a bullish absorption candle, is a candle where the low of the current candle, right, went below the low of the previous candle, and then the close of that current candle is higher than the low of the previous candle. So it kind of sounds like a handful, but it's quite straightforward. You can see that this low is lower than this low. However, the close of this candle is higher than the low of this candle. So yes, that is an absorption candle. Now, right, you ask yourself, is price still within the same context? You can see price is still within the context. So this would be another trade that is taken, right? So at the close of this candle, you take a trade, you put your stop loss below this low, and you go after 1:3. Okay, so let's say we go after 1:3. Where's 1:3? Right? So in this particular case, we also take another loss. See how I'm not filtering this out so that you understand that this is what real trading actually looks like. So third trade, right, is also a loss, and we lost 1 which now equates us at 1 So we've taken 3 trades, right? Now remember, you can refine this even further, right? Taking 3 trades, 1 win, 2 losses, but we are still up 1% on our account. Now we continue to move because remember, we're only looking for buying opportunity in this market because of the context, right? So price, so I'm going to be a little bit fast. I'm not going to, so that because we're running out of time, so that I can show you more and more examples within the same price action here. So this is our low, right? A price. So price broke down and then broke back up. So we have a break of structure here. And then this is our high. And so we ask ourselves, where did the move come from, right? So this is the range. So let me do this like so. Let's move this one to the side. Okay. And then let's move this one to the side. So this is now our range where this is our, where are you? This is our low, right? So our high. And the in this big move here, we ask ourselves, where was the last down candle before the up candle? This was the last down candle here before the up candle, right? And is there an imbalance within that area? There, we ask ourselves, well, there are multiple imbalances, so we can refine this further. Now, if to take it a little bit step further, even the week. So, for example, this candle week like this is also kind of like an imbalance. But let's just take this entire candle here. So this is the down candle. There's an imbalance here. And as long as price does not go above this high here, we are good to look for what you call buying opportunity in the market. So you can see in this particular place price from here. Now, remember, this is a 1 hour time frame. You can even take this a step further and within the 15 minutes or 5-minute time frame, begin to look for buying opportunities here. But that's a different section entirely. Okay. So you see how we're just repeating the process now. There's no trade for us to take here because price is not giving us a clean setup. But then price went from, now did a new low, right, to a new high. And then we ask ourselves, where did the move come from? You can see there's an imbalance here, right? In this particular case, you can see there's an absorption candle here. Price came, this is the move here. There's an imbalance here with this candle. Price tapped into the last down area before the up move. And then you can see that price gave us this absorption candle. So if we're looking to take a trade here, it will be at the close of this candle. Our stop loss will be few pips below the low. And we will go after 1:3. Okay, so in this particular instance, you can see price went even 1:5. But just to keep it simple, we go after 1:3. So our fourth trade in this particular case here now is now this will be trade 4. This is a win, and then that is plus 3 which equals plus 4 So we've taken 2 trades, lost to 1, 2, and we are up 4% on our account just within this area, trading a very simple system. Like, it's not complicated. We don't have to make our system overly complicated. We just have simple rules and stick by those rules and do the same thing over and over again. Now, remember, as price continues to move, you always want to, from time to time, move back up to the higher time frame and ensure that you are still within context to keep looking for the trades, right? Again, this is now you can see once we're done with the particular trade, that's done. This is now can I get this one? So this is now our new basically our new low to our new high. And then we ask ourselves, where are the imbalances and other blocks within this area? You can see it here. There is an imbalance with the last down candle before the up candle here. That's an imbalance. Now, can you see that there's an what you call it? There's a rejection candlestick, an absorption candlestick here. Can everybody see this? Can you see that this is an absorption candle? This last one here, this last bearish candle. Do you agree that this is an absorption candle? Quickly, let me get your responses. Okay. So you can see that the low of this candle went below the low of this one. However, the close of the candle is higher than the low of this one, right? So it fits our description for an absorption candle. But remember, we're not just trading the absorption candle, we're trading it with context when it lines up with our order block and our imbalances. And you can see it in this case here. This is where we have our last down move before the up move. There's an imbalance in price here. And you can see how that's, 3 confluences. So in the last class I taught confluence. That you can see how we have 3 things lining up to confirm our price direction. And once we see our 3 criteria as met, we're going to take a trade. So in this particular case, we take a trade at the open of the next candle. We keep our stop loss just below the low of that candle, and we go after 1:3. Okay, so very simple, not complicated trading rules. Anybody who is, who's serious or willing can look to take the trade. Now you can say I can make this trade even much better if I decide to go after 1:5 or 1:6. But just to keep it quite simple, you can see this will now be our fourth trade, or our fifth trade in this case. This will now be trade 5. It's also a win. We gained 3 RR. We are now at plus 7 RR. So if you had a $10,000 account, you've made 7 RR on your account. If you had a $1,000 account, you made 7 RR. If you had, 500, whatever the case, you see how this way we're not risking too much of our account. It's okay taking losses. We take our losses and we move on, and we continue to look for the same thing. Again, we do the same process again. This will now be our new low, and this will be our new high. In this particular case, price did not pull back down, so there was no trade. The price now made a new low and a new high. And did price give us a trade? So there was also no trade here. So you will miss some trades, sure, it's fine. You're not going to capture all the moves in the market. However, if you don't need to capture all the moves in the market to make money in the market. Again, this is now our new low, okay, and our new high. And you can see that there's one very big imbalance here. Price came down, in this particular case, it did not come back to the last down move before the up move, and then it began to push up. Now, you probably missed this trade. Myself, personally, I would have gotten involved in the trade using a different system because of the way I trade. But nonetheless, we don't get involved in that trade, and price continues to move. And you see how low is our new high. Price push up, pull back down, begins to break down, okay? Begins to break down, and we still maintain the same trade idea. Our bias is still exactly the same. Now, we're now at current price. What do you think I'm looking for here in price? Well, if I were to draw the structure in price, this is our low to our high. So this is what the structure for me would be like. This is the low to the high, right? This is the lower low, the higher low to the higher high, and then we broke down. So this is now a break of structure, and then we begin to break back up. So this is the low that forms this high, this low that forms this high, and then we'll break back down. So right now, what would I be looking for? Well, because of the context of this market, if we get a break like so, if price breaks above this high and pull back down something like this, I'll probably be interested in looking for looking for opportunities to get involved in that trade, or obviously trade with my own exclusive system where I trade something like this and look for confirmation for entries around here. But you get the idea. It's very simple, very straightforward. You don't need to overcomplicate. Your trading doesn't need to be complicated. It actually needs to be simple if you're going to be profitable in the market. Somebody is asking, Ibrahim is asking if this strategy will work on gold. It will work on every single instrument. Let's give it a try. Let's just jump over to gold and see if we can do the same thing. So XAU USD. And let's go up to the daily time frame and identify direction. You can see this market is bullish, very bullish. So we're only looking for buying opportunity. If we take this previous area here, that means in the past one, if we were to use, let's say, the 1 hour time frame, we're only going to be looking for buying opportunities. And in that particular instance here, so let's do something like this. Let me just go back here. All this area here, what do you see? You see low to high, low to high. No. Let's do this. Okay. Price making higher lows. Why is it drawing a rectangle? I don't want a rectangle. I just want a pen. Okay. So price making higher lows, and what is your problem? Where's my pen too? Okay, let me just use something else. Where are you? So you can see price is making higher lows, higher highs, higher lows, pulling back into. It's not always going to pull back, but many times it does pull back. You can see it's making that same type of move. Now you ask yourself, right? Would you have been able to get trades from here? Well, surely you probably would have been able to get trades. You need to understand the direction that you're looking at, because remember, imagine you're trying to trade, you're trying to sell this market, you take a lot of losses. But because you understand context and you know what direction price is most likely going to head, and you're looking for opportunities in that direction, doesn't mean you will not take losses, but at least you'll be on the right side of the trend. So if we were to do the same thing here, you could see, look at this example, for instance, here. Price went from this price went from this low here, okay, to this high here. Then what? Okay, if we zoom in here, you ask yourself, where did the move come from? Where was the last down candle before the up candle? It came from here. This was it, right? This was the last down move before the up move, okay? And then what do you see? Price came, tap into it, and where did it go next? This high. Now, another thing you can do to also put the, put the RR in your favor is to go after the high. So let's say, for instance, if we let's say if we get involved in the trade, instead of going after 1:3, you go after you put your stop loss and then go after the high. If it's at least if it's more than 1:3, you can go for that, or if it's you can go after the high in a case like that. So this is very straightforward, very simple system that we look to trade that would enable you, become an even better trader. So if I'm asking, so what do you mean that if the market is bullish, we look for buy? A bullish market is a market that is making higher highs and higher lows. Simply put, if you look at the market on a higher time frame,